You're probably wondering when the feds are going to stop increasing rates because it's hiking the price of mortgage and basically home ownership, it's going in the garbage. And it's like taking a whole bunch of money and doing some of that. Right now, everyone wants to know, when is the madness going to stop? I'm going to tell you exactly when it's going to stop, but more importantly, should you wait for it to stop? Or what should you be doing in the game of real estate right now? What I'm doing might surprise you.
One shot, now the future is yours. Go! I'm turning dreams into reality. Yeah, it's one shot, now the future is yours. Go!
All right, check it out. So today we're gonna answer this question. When will the Fed stop raising the rates? And right now it's getting ridiculous because if you look at a $300,000 mortgage a year ago versus today, the payment is now $650 higher a month. A year ago, people that were building houses, their houses are done being built. Rates have gone up. They haven't all been locked in. They're like, my payment is $1,000 higher than I was expecting. Got news for you. I can't pay for that. Is this sustainable? And how long is the Fed going to keep doing this? And is it going to get a lot worse before it gets better? Well, guess what? We just saw another Fed rate hike. It's been happening all year long. And now there's talk that that might be continuing into 2023. Check this out. On Wednesday, September 21st, the Fed once again raised benchmark interest rates by 75 basis points. That basically means 75% of a percent or 0.75 of a percent. So basically almost a full freaking percent. And they indicated that they would continue to hike rates until the funds level hits a terminal rate or an endpoint of 4.6% in 2023. Now, mind you that this is base. And so if you add prime on top of that, that's going to put mortgage rates somewhere around 7.5% up to 8%. And you know what? We haven't seen 7 and 8% interest rates for well over a decade. And there's a lot of people that are not mentally prepared for what that means. So what is the Fed trying to accomplish here? Well, Biden's really proud of unemployment being under 4%, but frankly, this height rate all has to do with the government's attempt to control inflation. It's been out of control, and if they don't get it under control, we're all going to be in really bad shape. Check it out. It means that the real estate game, we have shifted from a seller's market all of a sudden to a buyer's market. And if you look at the Dow Jones, guess what? We are back into a bear market all over again as the Dow Jones just hit a new year all-time low. So check it out. The environment of increasing interest rates has discouraged some from buying real estate, leading to an increase in inventory, which is great, by the way, because we've had inventory shortages and problems for years. In fact, we have never recovered even out of 2008. But with more supply and less demand, the market has shifted in favor of the buyer. In fact, the number of sellers that reduced the price of their property spiked by 31% from June to July. That's what is indicating now all of a sudden that we are in this buyer's market. And what that does is it shifts control, well, to guys like me, back to the investor. Because when it's a seller's market, do you remember a year or two ago when the prices were going up and up and up, and all of a sudden you would sometimes get 10, 20, 30, 50, 100 offers on a single deal. That meant that the offer they were going to take was someone paying way above asking price. They were going to take an all-cash offer, someone that was going to close in 7 days. I mean, it was nuts what happened in the real estate market. The tide has turned, and finally the market is breathing. And guys like me, we're breathing too, because guess what? I'm a real estate investor. You might be subscribed on my channel because you're here to learn the hacks of how to invest successfully in the game of real estate. And it's really hard to get your hands on a really good deal when everyone wants to buy the same piece of property. Part of getting a good deal is finding the property that everyone is ignoring, that you can get an extraordinarily low price. And because the market has lost confidence and we're now back in a buyer's market, there's all sorts of people that were selling. They're like, shoot, I'm probably going to have to come down a lot in price if I'm going to make this thing move. They're scared, they're nervous, they're worrying, they're dropping their prices. This is perfect for an investor. So here's the question. When will the market actually cool down? Where have you been? The market has already started cooling down. This actually comes from the Federal Reserve Bank of Atlanta. They're asking this question, and check out this graph. And they're basically saying, although the rates are currently increasing, market price is predicted to soften over the next 3 years It already has started. And investors speculate that once rising rates begin to negatively impact the economy, the Fed will then gradually lower rates again to achieve a soft landing. If you take a look at this graph, they're projecting into the future. It's like, okay, I get it. Rates are kind of going up right now. But once we kind of hit that terminal mark where we hit that 7 to 8% of mortgage rates, that's high enough for the government to say, hey, hopefully that was enough to lower the rate of inflation. And guess what? We can start gradually lowering those rates again so that we can re-stim the economy without that inflation, start moving the markets again, move real estate, and start dealing with our inventory problem. Because truth is, inflation is the bigger problem of the two right now. Now check this out. Moody recently predicted that 210 out of 324 markets were expected to decline between 10 and 20%. And they've started releasing some lists on who's going to be hit the hardest. And you know what, obviously some of the large major metropolitan, as expected, it's going to include them. But Phoenix, oh my gosh, they get such a bad rap. This happens to them every single time. Vegas as well. Basically, any market that went up substantially is going to have to see some type of course correction. And frankly, this is happening only because the Fed has increased the rates. Understand that we have an inventory problem of missing millions of homes. But that doesn't matter if rates are so high that people can't actually afford those homes. That's the problem and dilemma we have right now. And basically the government is saying, nah, inflation's a bigger problem than the inventory problem. That'll work itself out in the future. Let me tell you, when they start softening the rates again, the price on real estate is going to go buco bucks, which is why right now I'm in buying as much real estate as I possibly can. I did the same thing in 2008. Everyone was terrified of the market. They said it's an unknown. We shouldn't be doing anything. I'm like, buy as much real estate as you can right now. Okay, Kris, why should I buy now instead of later? Let's not take on the investor's point of view. Let's just take on the average person that is deciding whether they're going to buy a home to live in for their family or stay renting or stay in the other home that they're currently living in. For example, right now, let's evaluate on a 30-year mortgage 2 scenarios. One where I can buy a house right now for $500,000 with an interest rate of 5.2%. Over the life of the loan, I'm going to pay somewhere around $988,000. But you might say, but Kris, what if I wait and let's say the market goes down? I could pick up that same house for $450,000. I'd say, great. But what if rates are now at 6.5%? You'll end up paying $1,024,000 over the life of that loan. And if you compare the difference, buying the more expensive home now with a lower interest rate compared to a less expensive home with a higher interest rate, there's a delta, a difference of $36,000 that you'll actually pay more by buying the less expensive home. So if you're trying to buy a home to live in as a primary residence, now definitely makes more sense because the Fed has released their game plan. It's not just raising rates in 2022. They're going to do it through 2023 until they hit basis of 4.5, which is going to put mortgage rates not at 6.5%. It's going to end them up around 7.5, 8%. And if you look at that, it's like, oh, definitely getting something with a lower rate right now is definitely going to be better later. Let's take a look at it from the investor's point of view. So let's talk about for the investor. Do you think an investor that is making 25, 35, 40% on their money year over year over year cares whether the interest rate is like 6% versus 7%, 4% versus 5%? I'm just going to tell you right now, if they're concerned about that, they're not a real investor. They're a noob. They're a newbie that doesn't really know what they're doing because they're still hearkening to this rate consciousness that you should be rate conscious about when you're talking about a home that you're paying interest on that you're living in. But when it's an investment property, we're not caring that much about the interest rate because instead we're caring about cash flow, appreciation, tax benefits, and renters that are actually paying down the mortgage. So for me, over the last several years, I'm now averaging 34% annual ROI. So if a rate goes from 6 to 7%, guess what that does to my ROI? It dinks it down just a little bit. And my standard is, at least if I'm earning 25% a year minimum on my money is basically doubling every less than 3 years. That compared to a 401k or IRA is turning my money so much faster that guess what? That's why I build wealth. That's why 90% of all millionaires did it in the game of real estate because they understand a higher ROI compounds your money meaningfully and faster, and that's how you actually build long-term wealth. So this whole interest rate conversation to the investor, who cares? Now, there is a caveat on that. To the investor, there is one thing that we care about. We care about the monthly cash flow. For example, hey, I bought this house, it's an investment property, and after renting it out and paying all my expenses, I'm actually negative cash flow $300 a month. that would be a problem because now you're losing money every month and that puts you in a compromised scenario. My goal is to not lose money. My goal is to what? Is to make money. And remember, real estate has multiple profit centers. Yeah, I want the tax benefits. I like that. Yes, I like that it can go up in value. But real estate, the way I do it on a short-term buy and hold, it's a play that takes a little bit of time and builds a legacy wealth. But to make sure it's sustainable, I need that positive cash flow component, which is why out of 324 markets around the United States, there's only 5 that I'm investing in. And it's not the 5 that are going down in value right now. Check it out. Feds are going to keep increasing the interest rates. If you're an investor, it shouldn't matter. If you're buying a house for you and your family, if you can cover the payment, it's only going to go up likely over the next 12, 18 months. Or my guess is you should just wait and hold off for 2 or 3 years before you maybe see that softening like we've talked about today. For me, don't try to time the market. Invest in the market, but to do that, you have to know what you're doing. For example, I can take $50,000 from a 401k, an IRA, equity in another home, savings, and if I'm earning 34% on that over the course of 20 years, in theory, that grows to over $17 million. So if you like the sound of them apples, did you know that I have people around the world that watch my YouTube channel, get educated by me, they read my books, and then at some point decide whether they want to partner with me in real estate and we invest together? If that is of interest to you, then click the link below and actually learn on that page about partnering with me and the details and what my track record is on my last $2 billion worth of real estate that I've invested with people, the kind of ROIs that we're getting and our track record. We'll share all that information with you. And if it ends up being a good match, connect with my team on it. And guess what? If we're partnering up, I'm going to show you how to make money in up markets, down markets, sideways markets. It doesn't matter because I'm harnessing the single best strategy in all of real estate. Click the link. Let me show you how to crush and win. You're right. I did talk about the top markets I'm in. Wait, you want to know what those markets are that I'm investing in? Click this video. Let me show where you should be going right now, placing money, investing, especially if you want to win in the highest way possible.